Ethereum hits $4,600, parabolic run, or pullback ahead. Ethereum just ripped to approximately $4,600, its highest level since late 2021. Spot Ether ETFs are seeing record daily inflows, and momentum traders are piling in. But with ETH pressing into historic resistance near all-time highs, is this the start of a parabolic leg? Or are we due for a sharp pullback? Today we'll decode the data, the catalysts, and the risk levels, so you can trade or invest with a plan. Welcome back to CoinF Pro, your signal in the noise. If you're new, we break down crypto markets with clarity and practicality. By the end of this video, you'll know what actually pushed ETH to approximately $4,600 today, the key levels and indicators that will likely decide breakout versus pullback, how beginners, intermediates, and advanced traders might navigate the next 1 to 2 weeks with concrete frameworks. Quick data check. ETH around $4,500 to $4,600 at recording, up approximately 28.5% over the last 30 days. I will quickly add a disclaimer here. This content is for educational purposes only, not financial advice. Always do your own research and consider professional guidance. Crypto is risky. 1. What just happened? Fresh highs since 2021. ETH tapped the 4.6K handle intraday, closing in on the 4.8K all-time high zone. Momentum accelerated as headlines hit about ETF flows and short liquidations. Record ETF demand. U.S. spot Ether ETFs just posted their first $1 billion net inflow day, led by BlackRock's ETHA and Fidelity's FETH. That's real regulated demand absorbing supply, especially into a thin summer tape. 30-day performance. From mid-July to today, ETH is approximately plus 28.5%. 30 days. That's a strong monthly impulse by any standard. ETH per USD daily chart with a trend line from spring lows. Highlighted resistance band, $4,600 to $4,880. Daily ETF net inflows for ETHA and FETH on the biggest day. 2. The bull case. Why a parabolic extension is possible. ETF flywheel. Inflows bring new buyers. Price strength pulls in media attention and more allocations. The $1 billion per day net inflow print suggests institutions are engaging, not just retail FOMO. If flows persist, supply absorption near highs can force price discovery above the all-time high. Macro and leadership rotation. ETH is finally catching up to BTC's earlier ETF-led cycle. Several outlets note ETH is closing the performance gap, classic late-cycle rotation within majors. Narrative stack, yield-adjacent exposure via ETFs, no staking, still appeals to traditional allocators who prefer brokerage custody and portfolio rebalancing workflows. Ecosystem breadth, DeFi, L2 scaling, RWAs, and developer network effects keep Ethereum the default settlement layer for many applications. The cumulative ETF net flows line chart shows an upward trend since the listing, and this will continue as the sentiments are high. The ETH versus BTC relative strength line, ETH/BTC, within the last 6 to 12 months, is beginning to close up. 3. The bear case. Why a pullback can hit fast. Overhead supply near ATH. The 4.6 to 4.88K zone is stuffed with prior bag holders eyeing break-even. First tags of ATH zones often reject on the first try. Air pocket risk. Rapid runs create thin supports. If ETF flow normalizes after a record day, momentum can stall, and fast money exits can amplify downside. Typical correction math. In strong uptrends, 10 to 20% pullbacks are common without breaking the structure. On ETH from approximately $4,600, that implies potential dips toward $4,100 to $3,700 before trend resuming. Mark supports $4,400, $4,200 to $4,250, prior breakout, $4,000, $3,800. Note, invalidation if price loses $3,700 on high volume. Structure break. 4. The key levels and signals to watch. Levels: resistance, $4,650 to $4,880, REDATH supply. Supports: $4,400, intraday, $4,200 to $4,250, breakout retest, $4,000, $3,800. Signals that favor continuation. Another greater than $500 million daily ETF net inflow print within the subsequent few sessions. Clean consolidation above $4,400 with declining intraday volatility. Signals that favor a pullback. Failed breakout above $4,650, followed by strong sell volume. 2 consecutive days of weak or negative ETF flows. 5. Playbooks by experience level. Beginner, keep it simple. DCA on red days only. Avoid chasing green candles. Consider spot or ETF exposure rather than leverage to limit liquidation risk. Predefine a max portfolio % for ETH and stick to it. Intermediate, rules plus risk. Breakout retest approach. Add if ETH holds $4,400 to $4,250 after a dip. Cut if we close below on volume. If you trade derivatives, cap position size and use stop losses, just under structure, not dollar round numbers. Advanced, hedging and structure. Into resistance strength, consider covered calls or collars against spot ETF exposure to harvest IV while protecting downside. Short-dated protective puts near supports can define risk during event-driven sessions. Flows, macro prints. If flows stay hot, stair-step scaling above ATH with trailing stops can let you ride a potential parabola. Your 3-step plan for the next 7 to 14 days. Define your bias and invalidation. Bullish only above $4,400. Neutral between $4,200 to $4,400. De-risk below $4,200. Set automated alerts and checks. Price alerts at $4,400, $4,650. $4,880 and supports. Daily ETF flow check. Net inflows versus outflows. If flows fade, tighten risk. Choose the instrument. Spot ETFs for simplicity and lower maintenance. Options for defined risk hedges. Perps only if you have strict risk rules and understand funding. ETH at approximately $4,600 is a decision point. If flows remain robust and price consolidates above $4,400, odds tilt to an all-time high break and potential $5,000 to $6,000 price discovery. If flows cool and we slip back below 4.2K, a healthy pullback to reset the trend is likely. Comment below, parabola or pullback? What's your plan at 4.4K, 4.65K, and 4.88K? If you found this helpful, like, subscribe, and hit the bell for real-time, fact-checked crypto breakdowns. Disclaimer: this content is for educational purposes only and not financial advice. Always do your own research and consult a qualified advisor. Cryptocurrency investments carry significant risks.